For example, we'll consider the following which is extracted from the records of Miss Seetu. So where capital at the beginning of year is, which is on April 1st 2004, 1,20,000. Then capital at the end of year, that is on March 31st 2005, which is 2 lakhs. Then we have capital introduced by the proprietor during the year, which is 50,000, and withdrawal by the proprietor during the year, which is 30,000. Now the profit for the year will be calculated as follows. The profit earned or loss incurred during a given period of time will be computed as, where first we are going to consider is capital as at March 31st 2005. So we are going to take capital as at the ending, so which is closing capital, which is 2 lakhs. Then we are going to add drawings to this, where the drawings is 30,000. So closing capital plus drawings, we got 2,30,000. From this we are going to deduct additional capital introduced during the year, which is 50,000, and the balance we have is 1,80,000. This 1,80,000 is called as adjusted capital as at 31st March 2005. From this we are going to deduct the capital at the beginning, which is nothing but the opening capital, which is 1,20,000. So 1,80,000 minus 1,20,000, so difference is 60,000, which is nothing but profit made during the year. So how we are going to calculate this particular equation is, so we are going to take the closing capital, so total capital what we have in the business, and the amount which was withdrawn by the proprietor is added back to the capital. So closing capital plus drawings were added. Then again the additional capital which was introduced, that we are going to deduct. Then we are going to deduct the capital which was opening. So opening capital will be deducted, and the balance which is left over, that will be the profit of the year. Let us take the next illustration, where we have to prepare a total bills receivable account, total bills payable account, then creditors account and debtors account. So when coming to the illustration, we have compute the amount of total purchases and total sales of Mr. Amit from the following information for the year ending 31st March 2005. Now let us see what is the information provided here. We have total debtors as on April 1st 2004, 40,000. It is nothing but the opening debtors. Then we have total creditors as on April 1st 2004, 50,000. So this is opening creditors. Then we have bills receivable as on April 1st 2004, 30,000. So opening bills receivable. Then bills payable as on April 1st 2004, 45,000. Then this will be the opening bills payable. Then we have discount received 5,000, bad debts 2,000, return inwards 4,000, discount allowed 3,000. Then we have cash sales 10,000, cash purchases 8,000, total debtors as on March 31st 2005, 8,000. So when coming to the debtors, we have opening balance, so this will be the closing balance. Then we have cash received from debtors 1 lakh, cash paid to creditors 80,000, cash received against bill receivable 25,000, payment made against bills receivable 40,000, total creditors as on March 31st 2005, 40,000. So this will be the closing creditors. Then we have bills payable as on March 31st 2005, closing bills payable 50,000. Then bills receivable as on March 31st 2005, 35,000. So this will be the closing bills receivable. So this is the information what we have. From this information we have to prepare a total bills receivable account and total bills payable account. So when preparing total bills receivable account, we are going to take opening balance in the debit side and closing balance in the credit side. And any cash received against the bills receivable will be considered in the credit side, and we have to close the account where both the side total should be same. So difference or the balancing figure what we are going to get, that is nothing but the total debtors which will be considered in the total debtors account in the credit side. Now let us start with the totals bills receivable account. So where the format will be of ledger account. So title will be total bills receivable account, and coming to the format, date, particulars, journal folio, amount, then again date, particulars, journal folio, amount. Left hand side it will be debit, so where we are going to write DR, and right hand side it will be CR, which means credit. So when coming to the bills receivable account, the opening balance will be in the debit side, because anything which is supposed to be received or anything receivable is an asset for the organization, and asset always shows debit balance. So coming to the debit side, by balance or directly we can write balance brought down 30,000. Then we have cash received against the bills receivable, that will be considered in the credit side. So where cash 25,000. Then again we have closing balance of bills receivable, that will be considered in the credit side, because asset always shows debit balance. So opening will be debit and closing will be credit. Balance carried down 35,000. Now when closing the account, we can see that credit side total is excess but debit side total is less. So coming to the credit side, the total was 25,000 plus 35,000. So the total is 60,000. Same 60,000 we are going to write in the same line in the debit side. 60,000 minus opening balance, which is 30,000. The difference will be 30,000. So the entry will be total debtors. In bracket we can write balancing figure. So this 30,000 will be appearing in the total debtors account in the credit side. Now let us prepare the bills payable account. So where the title will be total bills payable account, and the format will be of the same ledger account, date, particulars, journal folio, amount, date, particulars, journal folio, amount. So left hand side it will be debit side and right hand side it will be credit side. So coming to the debit side and credit side, when coming to the bills payable, it is a liability where today or tomorrow we have to pay. Coming to the liability, the opening balance will be considered in the credit side and closing balance will be considered in the debit side. So coming to the credit side, first we are going to record the opening balance, where balance brought down 45,000. Then again we have payment made against the bills payable, that will be considered in the debit side, cash 40,000. Then we have closing balance, again it will be in the debit side, balance carried down 50,000. Now again we can see here that the total of the debit side is more and the credit side total is less. So debit side total is 90,000, 40,000 opening balance, then 40,000 payment made, and the closing balance is 50,000. So the total of debit side is 90,000. Same will be considered in the credit side in the same line, 90,000 minus opening balance 45,000, and the difference will be 45,000, which is nothing but total creditors in bracket balancing figure.